Hi guys, Angelena here with
Hello.
Ron, the money man, Mr. Williams. Hey Ron, how you doing?
Hey, Miss Angela, I'm doing good. How about you?
Doing
Doing
fine.
really good. I won't complain a bit. It's what night is it? What day is it's Tuesday? I know what night
It
it is.
is the second Tuesday. It
It
is the
is.
8th. So as you guys
Yes.
know, we come on the second Tuesday to kind of talk about things going on. Our main thing now has been just talking about how to purchase in the pandemic. And for those of you who are just joining us for the first time, I am Angelena. I am a broker associate slash realtor here in the Columbia, Greenwood, Sumter, Florence area. And
Mhm.
also we have Mr. Ron Williams here with Silverton Mortgage, who has been in the industry for almost 30 years,
Oh,
helping
that
the
sounds
deals
so
be done.
old. That sounds so old. Tell 'em,
That's not
tell 'em,
old, that's experience.
look, tell
20
them, tell them that I started when I was really, really young. I was just like Ray. I was so very young, Angelina. You got to put that in context.
Okay,
When you
so
said
Ron
30,
started doing mortgages actually when he was 12.
12. There you go. There you go. Now we on point.
That's
Now
not even 30 years. He said he started when he was 12. Hey, Ron, we got some
yes.
people that are joining in. Guys, we have a chat that we start.
Hey.
We can't respond type wise to the chat, but we see the chat. So we see what you put on.
Okay.
Denise Bowden joining us, Lewis Edmond Jr. joining us, Sheila. Hi guys, how you
Hey.
all
Hey.
doing? And
Hey.
in the
What's up?
chat, you can be able to put your questions in there. I promise you we'll see it and we're gonna make sure we get to it. So
Absolutely.
today, even though you need money to buy a house, sometimes okay, we got another person, Andrea. Nisi, she's joined us too. Hi, Nisi. Um, even though
Hey,
you have
Lisa.
a loan for the house, there are things that are associated with the loan with getting it. Um,
Mm-hmm.
and what people don't realize is that no matter how much you may qualify for, there are certain things that you may have to also accommodate. Well, not excuse me, not may, but that you do have to take into consideration, which are sometimes down payment and closing costs. So today we're going to talk about, because this is always the question that we have, down payment assistance.
Yes. 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 Absolutely. It is a big topic all the time. All the time.
so with that, um, so with that, Ron, we're going to talk about what is down payment assistance, what's
Okay.
available out there, and
Mhm.
how one qualifies for that. So, if you don't mind, I'm going to let you go into what. Well, I guess I can talk about what down payment assistance
Yeah,
is.
you can as well. Absolutely.
So,
Um, Go
what
ahead.
down payment assistance is, guys, is basically exactly what it says. There are certain loans, whether you have an FHA loan, sometimes if you're also doing a conventional loan, they don't do up to 100% in financing. Now, to my veterans, thank you, those who have served, you are able to qualify for 100% financing loans. And sometimes there are some portfolio loans that are available that do 100% financing as well as rural, excuse me. Now, with FHA loans, they will finance up to 3.5%, and with conventionals, they will finance up to 3%, 5%, sometimes. And I think those are the only ones you can do down payment for because it has to be for your home. Period.
Mhm.
Um, and so, with that, there's certain qualifications that you could be able to do. There's certain type of unique programs that you may also be able to take advantage of. Um, and just know that with these down payment assistance programs, you need to make sure that you're with someone who's experienced like Ron that can help you maneuver through those because of, and I'll talk about more why it's important from on a realtor standpoint when we're writing contracts of why that's important to us. So Ron, you go ahead.
Yes, thank you, Angelina. And that's a very important part to discuss as it relates to how can it affect your ability to compete and win and ultimately receive a ratified contract. But I love how you preface this conversation by saying that down payment assistance is just that. It's down payment assistance. it doesn't necessarily means that it is the totality of what you need. Fact about it, it won't be the totality of what you need. You're going to need funds to be able to have as earnest money. You're going to need funds in order to get what's called prepaids done, such as, think, well, not just prepaid, some of your closing costs, such as items like appraisals. You're going to have to get, which is the evaluation of the property, generally has to be paid up front. You have to also uh, uh, be able to get home inspections and some of the things that you guys require. So down payment assistance generally does not mean that I don't have to bring any money. The other thing that's vitally important to this process is that you also have to have funds available, generally in many cases, for reserves. So whether you may need to use that money or not, toward your down payment and closing costs is one thing, but you may need to just have money when the closing is over. You may have to have reserves that are sitting in your account so that the bank can understand, so that the mortgage company or bank, whomever you utilize it, can know that you have a capacity to pay after the loan is closed. Now, a few years ago, as you mentioned earlier, I've been working in this industry for a long time. I date back to the pre-foreclosure crisis that took place in 2008 in the market crash. So I go back all the way as far as the subprime era, the subprime era. And during that era, we know people bought houses with no money down. People bought houses with no income, literally. People bought houses just if you could breathe, you could buy a house back then. Yeah. So if you could breathe, you could literally buy a house. But since that time, because of how things went, one of the strategic things that was put into law is that we want people to understand that home ownership is a benefit, and home ownership is going to cost you something, and that it's an investment, that is not for free. And so the belief is that when you have, we heard this terminology back then a lot, skin in the
In
game.
the game.
Yes, skin in the game. When you are bringing something to the transaction, then it means it has greater value to you. And I know this to be true, by the way, because I got four sons, and I remember buying my sons cars, and for some reason, when we bought them cars, they didn't take care of it as well as we wanted them to take care of it. But all of a sudden, when they had to go and get their own loan and pay their own money, somehow mysteriously it went to the car wash every week. It got the oil was changed, and because why? They had an investment into it. It was nothing that was given to them. So that's the way the process of mortgage had been evaluated, that the industry recognized that people needed to bring something to the table. However, even in spite of those things, we recognize, the industry recognized rather, that there is still a need for what we call affordable housing. There's still a need for people that aren't able to bring the quote unquote industry standard of 20% to the table in order to purchase a home, but they would need assistance. They would need assistance. So um, things were created in time, the benefit of being a veteran afforded you the opportunity of being able to get 100% financing. Still doesn't mean no down payment. It means that there's not a required down payment, but there still may mean that you need to bring money to the table to cover closing costs or other things that are necessary. But so the same happened in terms of creating the FHA loan. The FHA loan was created, first of all, to offer a lower down payment loan to people that could not come up with the full 20% for standard mortgage lending. Then there were created affordable housing programs where they would give assistance in order to help people be able to buy. Generally, one thing, it started in municipalities where counties wanted to encourage buyers to purchase within their county or within their city limits, and they would offer down payment assistance. And part of the requirement would be was that you would need to stay in that property for a certain number of years. And that was part of the requirement. And if you stayed in it for a certain number of years, then they would give you so much money towards your down payment. So it created the origination of down payment assistance. Now we've seen that fostered throughout the years and have grown. The
Yeah.
main down payment assistance program, and we're mainly talking South Carolina, but I do work in North Carolina. South Carolina Housing is the main down payment assistance portal that we used here in South Carolina. Now there are some county programs that offer down payment assistance, and that generally come as a greater part of a grant, housing distribution grants that are given. And sometimes those funds come available to counties where Richland County or Lexington County may offer a $8,000 program, or Richland, I think, I'm not certain, but Richland, I think this program may have been revitalized. There may be some funding for this. I've got to actually
Okay.
to verify, but they had one that was 8,000 for regular stick built and also resale homes and new construction homes, and then they had one for 10,000 for new construction. Somebody recently contacted me about it and sent me a voucher that they had completed their program, but I haven't received anything internally that those programs are there. But the main one that we use for the most part is South Carolina Housing. South Carolina Housing offers right now $8,000 down payment assistance program, and that is through what's called the bond program. The bond program, Angelena, is really what we call the most restricted program. It's going to require a lot of different benchmarks that must be met. It does have the lowest credit qualification to it. All you need to qualify for a bond loan is 8,000, excuse me, a credit score of 620, which
Okay.
starts at what we call in industry a minimum credit score of 620. So we look at three bureaus. We look at Equifax, TransUnion, and Experian, and we look at all three scores. And if that middle score meets a 620 standard, then that means you qualify for the credit portion of it. Now we go to the income qualifier, because with state housing, it do involves income qualifications. In order for you to get down payment assistance, you have to be within a certain income, household income. For Richland County, it's $53,200. You can't be any greater than that to qualify for the bond loan of $8,000. Go
So,
ahead.
regards to with the household income, can you also
Uh,
explain what people, because a lot of times people think household just means who's ever on the loan, but
right.
household can be for, even if, let's say, if you have a husband who's applying for the home, excuse me, who's applying for the mortgage for the home, but then his wife
Mhm.
does work too. Even though she's not on the mortgage, they're going to still consider her income because she's part of the household, correct? When they're determining if it qualifies or not.
Absolutely, because when you utilize the terminology household income, then that's exactly what it means. It means everyone in the house, everyone who lives in the house, whether they're on the loan or off the loan, their income has to be calculated into qualifying for that loan. And also, any form of income, by the way, any form of income.
I was about to ask.
Sometimes, yeah, we may have a person that child gets Social Security income per month. And mom works, dad works, or everybody works, or my son in the house work. If he lives in the house and you're on the bond program, that income has to be counted as well. Because remember, the I mentioned earlier, the $8,000 bond program is the most restricted program. So that has benchmarks that has to be checked. It's a program that you have to fit into that certain box in order to qualify. Now, the $8,000, let's talk about how it can be used. On an FHA loan, we know that the required down payment is 3.5% of whatever the purchase price is. Whatever the purchase price is, an FHA loan as a down payment requirement is 3.5%. So if you're purchasing hypothetically $150,000 house, the minimum investment that you have to make is $5,250. Now, that's just meeting what's called the statutory requirement. That means, before we can do anything, you got to have 5250. You gotta have 5250. Okay, if you gotta have 5250 that's going to be applicable as your down payment. Can't go anywhere without that. Now we know also that we're living in a market now, this pandemic market, where most sellers aren't giving any closing costs.
Those
So
costs.
closing costs is a buyer's responsibility. It is not contrary to what many people believed before that it's a seller's responsibility. It is not a seller's responsibility. It is a buyer's responsibility. You're the one buying the house. It's your house, it's your down payment, and it's your closing costs. So average closing costs on a $150,000 house can run about right at about $6,000, between 5,500 and $6,000. So let's be conservative and let's just say an additional 5,000 for closing costs. So that takes us from that 5,250 to about 12. Excuse me, yeah, about 12,000, about $10,250. Takes us $10,250. So now, in order to cover your down payment and your closing costs, you're going to need a grand total of approximately, and that's a very conservative number, by the way, because customarily on state housing loans, there are additional fees that apply because banks generally apply a 1% origination, an additional underwriting fee, and an additional state housing processing fee. So your
Yes,
fees are a bit higher. So really a true number would be about 1250, but we're going
12,000.
to about $12,500. But we will play conservative tonight and say 10,250. So how it works is the 8,000 that you're receiving from South Carolina State Housing can be applied toward the entire 10,250. So that would leave 2,250 that's remaining. This is why down payment assistance does not mean 100%, because now we got a deficit left of about $2,250. Where do that money comes from? Well, in some instances, in some opportunities, there may be another down payment assistance program that's available where you can pull in additional money. But
Yeah,
for
you
the
can
most
stack it.
part, but for the most part, there isn't that. So we usually stop right here. So the buyer's responsibility would then be to come up with that additional $2,050,
Now,
$2,250. That's their part to the table.
now, let's just say in that scenario there, we have a
Okay.
person who's needing that additional $2,250. Are they able at that point to still get a gift even though they're getting down payment assistance? Because they may
Yes.
have a parent who's willing to gift them the funds to be able to still get them in there.
Yes, in some capacities, most capacities, I won't say all capacities, I will say most capacities, they are eligible to get a gift fund. And a gift is allowed. If there's a
Okay.
family member, is there a relative that, a immediate family member, relative that want to give them a gift, then generally it's allowed there. The reason why I'll say not in every case, because it depends upon the approval, the type of approval. Because remember, I mentioned earlier that sometimes we need additional funds just to have as reserves. Where
And
in
can you
instance,
explain what reserves are too? Make sure you
yes.
explain.
So
Hear that
in so in
word
some so in some instances, if the borrower doesn't have this money themselves, or if they're unable to get a gift, or well, perhaps if a gift isn't enough, then in some instances you can lose your approval. So it depends on a case by case basis whether or not a gift can be obtained. Most of the time it can, but sometimes it can't, because I put gift funds in on loans just like this that look just like this example that we're talking about. And when I put it in, guess what happens? I
Takes them out.
lose my approval. It goes from an approved to an ineligible, or it goes to from an approved eligible to a refer. And so what that means for us in the lending side, I have no deal now, because the system wanted it to have some money of its own. So
So
that's why when we talk about down payment assistance, we don't want people to take away from this conversation, I don't need no money. I don't need any down payment. The down payment is going to cover the totality of everything. It can in some cases, but in most cases it won't. But what it does do, let's talk about the good of what it does do. We just gave that scenario whereby a person would have to bring the difference of 2,250. But guess what? If there were no down payment assistance, you would have to bring
$1,000.
10,250. So there's an incredible benefit to it. So
It's
yes,
a
it
huge
especially
benefit.
in this market now where you're not getting seller paid closing costs much, it is a benefit. But you have to qualify for it. Let me tell you one of the other things about it is this that we need to know is that down payment assistance programs has to go through a second underwrite. Most people get weary from just one underwrite. One underwrite is enough to put most people in ICU, you know what I mean, and put them, make you feel like you almost have COVID, because depending on a person's situation, can be difficult. But with down payment assistance loans, you do have to go through a second underwrite, and it has to be underwritten by South Carolina State Housing as well. And what does that mean? That means it takes a little bit longer to do sometimes, on most times. On our
Yeah.
traditional loans, we'll tell you 30 days, but on state housing loans, we're going to tell you for
Or,
plan for 45 days. Yeah, plan for 45
and
days.
can we stop right here? Okay, so guys,
Yeah,
you all heard that he stated that it's a double underwriting when it comes to state housing, and it can take longer. So for
right.
all the people who have placed offers, let's say you were in that, you were doing all of this last year, you got frustrated, you wonder, okay, I got approved for state housing. Why am I not being accepted?
That's a
This
good
is
place to
one of
tell
the
us.
real reasons why, because honestly, even though the lender could approve you, it still has to go through state housing. You have 2 to 3 people in that office who are looking at these files that ultimately make the decision to see if you get that down payment assistance money. And so, from a seller standpoint, the seller, if they have an offer that does not have down payment assistance, and that means that person already has their down payment funds, because keep in mind, like how Ron says, they go ahead and they um, verify funds needed cash to close. They do that. So when they have a letter of a person who does not have down payment assistance, that means, okay, they've been verified, they have their cash. But then yet they have another one that comes in and it's stating, okay, it's the same loan type, but this person does need down payment assistance. The seller is looking at it. Do I run the risk of hoping that this person qualifies for state housing and get their down payment assistance to get their home, or do I take the offer that the person does not need down payment assistance, meaning that they have their funds, and also I could be able to close a week or two earlier. So keep those things in mind, because honestly, Ron, as soon as I talk to people, that's the first thing. I don't know about down payment assistance. I don't know about down payment assistance,
Yes,
because
yes,
everybody wants, and it is not that sometimes they need it. A lot of times
right,
I have people who may have 10, 15, $20,000 in the bank, but it's like, well, if I could keep my money, I would like to. But guys, what
right,
you have to know about this is that even though they are giving this money, excuse me, they're not even giving, it's really still a loan to you. It's not
right,
free.
right.
Um, if I don't know if you heard what he stated, if you stay in the property for a couple of years. I mean, nowadays people
10
are not
years for South Carolina State Housing.
exactly,
And
it's 10 years.
it's 10
And so,
years. Well,
and some
it,
people don't
it
even
is
take that long.
right. It's not so much. There is a first of all, Angelina. We didn't get to this part, but I want to definitely throw this in so that people can really understand this because this is vitally important. That's the thing. Down payment assistance are considered like a second mortgage. It's just non-repayable. It's non-repayable based upon you staying in it for 10 years. If you decided to move within that 10-year period or you wanted to sell it, then it becomes repayable. Every dime of it has to be repaid when you elect to leave the property prior to that 10-year period. So there's one version on the bond loan that's 10 years, but they do have a second version because they recognize that there are some counties and there are some places in South Carolina that the income level is higher. So they raise the income level on these locations, and but part of what happens with that is this. Part of what happened with that is this: is that they will extend the income limit up. However, this is the big difference. The
Uh-huh.
term goes from 10 years to 20 years. So
Ooh.
that second lien is recorded for 10 years. So that means if you go to try to refinance, you can't refinance. They sometime will subordinate a second. You can't pull cash out. You can't do some of the traditional things because there are conditions that comes along with down payment assistance that people have to be clarion clear about.
And another thing, guys, also, you know, another thing that Ron talked about how the current market that we're in. Another thing is that I'm having people who are talking to family members who have purchased, years ago. And back then, I remember those days when we would get those state housing down payment assistance. It wasn't a problem. It wasn't looked at as a problem like how it is now, because you didn't have as many multiple offers in competition.
Right.
We would have it to where people would get their down payment assistance, and sometimes they would get a check back at the closing. But it wasn't that they were getting free money back, if that makes sense. They were getting money that they had already put into the loan, their earnest money, their
Yes.
appraisal money. So it wasn't as if they were just getting all this extra money back, like how it used to be back in the day,
Yeah.
that was off of their loans. And another thing is, anybody that has bought from 2019 and back, they have no clue what this current market is. They just don't. And so when you hear, well,
Right.
I got a payment, I didn't have to bring anything, and I got a check back. Well, they did. They did get that. But you got to also know the specifics of what type of loan they have, what's going on, and what all happened. Because at that time, they might have bought a home to where they were the only offers, and the house been sitting there for 3, 4 months. So the seller didn't mind giving closing costs because it made sense then. Right now, it doesn't make sense for a seller to give closing costs when they're having 10 offers coming in at one time. It just doesn't. So you're going to have it be prepared to have some skin in the game. And another thing is with these down payment assistance, when they make these changes, let's say you utilize this and let's say right now he's saying it's 10 years you have to be in the property. Well, what if they decide to change it from 10 to 12? It doesn't matter whether when you bought, if you still are underneath that same requirement of 10 years and they extend it to 12, to my understanding, correct me if I'm wrong, Ron, you would then go from 10 to 12 years. And so just keep that in mind
Well,
too, people who they
Well,
went
what
through.
happens, yeah, well, once you close up under whatever plan
Mhm.
uh that you close under, they won't change that plan. They won't
Okay,
change that plan. You will remain in whatever term that you were in
so if you
originally.
start out at
So
8, like how they had at 8,
yeah,
those people still 8 years. Okay.
right. So you'll still be up under that, but it's you know, we see people a lot when they buy their starter home, they'll stay in their starter home on average about 3 years. And
Mm-hmm.
then from that point, they're ready to take the next step. And that generally involves selling their first home, being able to pull money out of it and be able to use that money toward their next purchase. At least that's the way most people do it. When you do have down payment assistance involved, then that second lien have to be paid back before the execution of that sale can occur, or either at the closing of it. So yes, it's non-repayable, but that term doesn't expire until 10 years. You won't have to make monthly payments on it. It's no interest rate on it, but it literally sits there for the duration of 10 years. And
10
at the end
years.
of that 10 years, yes, then that lien is removed from the property. And now we talked about one program, the bond program. Let me bring something else in too, Angelena, that because there's several programs that they do have. One of the big popular programs will be coming out in June. That's the South Carolina Heroes program. That's the
Yes,
one
I
for,
was going to actually talk about
yeah,
that.
that's teachers, firemen, police officers. That one is huge every year. That one last year, I think it was $9,000. So they increased the amount to $9,000. We don't know. It could be even more this year. When it comes out, it customarily comes out around May, between May and June, and it's there until the funds are depleted. So it's there as long as funds are available. With that particular program, if you're a teacher, a police officer, fireman, emergency worker, essential worker, you can obtain that. But here again, one of the benefits is the interest rates are lower. Just as a quick example, rates on a South Carolina housing loan today are about 3.350. So that's a pretty good rate considering what we were talking about interest rates before we came on live tonight, because rates have escalated. So state housing rates are generally about a 1/4% lower than the traditional market rate. The other thing, there are limits on how much you can buy. 230,000 is the max out on the bond loan program. That's
Okay.
that's the max that you can go on that particular program. Now they also have what's called the South Carolina Advantage program. The guidelines on Advantage are a lot more fluid than that of the bond program. For instance, we
Hmm.
talked about household income earlier, correct? And we talked
Yes.
about household income meant just that, everybody in the house. When it comes to the bond program, excuse me, when it comes to the Advantage program is different because it only requires the applicant's income. Only require the applicant's income. So
Hmm.
therefore, it's not going to look at the husband or the wife that's not on the loan, the child that works part time at the grocery store, the cousin
Okay.
that lives there, whomever. They're not looking at all your income. They're not looking at how much your side hustle income is coming in. They're not looking at anything. They're only strictly looking at the income of the applicant
Yeah.
only. So that makes a difference. The income limit on that loan is higher. It's at about 100. I think it's $93,000.
Okay.
$93,000 a year income. The difference is on the Advantage program is the down payment assistance is by virtue of percentages.
Hmm.
So it's either 3%, which gets you zero down payment. Well, excuse me, three is either 3%, 4%, or 5%. It's
Okay.
3%, 4%, or 5%. Let me double check that, make sure, because it did modify. No, excuse me, it's either 0%. Um, and I'll tell you why 0% is relevant, because somebody say if 0%, and I'm speaking of down payment percentages. Now I'm not talking about interest rates. So listen to this: 0% down payment assistance. That doesn't make sense, do it? But it's there. Zero
Uh-huh.
percent. I'll explain in a minute. Or you can get 4% of
Okay.
whatever the sales price is, or you can get 5% of whatever the sales percent is. So, or whatever the sales price is. So let's walk through the numbers. Let's use that same scenario that we
150.
used earlier. So if I'm going to buy $150,000 house, 4% would means they would give me $6,000, right?
Yes.
So that's 4%. So if I wanted to get 5% of $150,000, that means they would give me 7,500, right? So that's on the Advantage program. Or I could elect, I could say South Carolina State, give me 0%. Why would I do that? Well, the reason why you would do 0% is that maybe you're trying to capture the rate that they're offering,
Hmm.
because what they believe is that they're offering a little bit better rate. If you said, I want South Carolina housing to service my loan, but I don't want any money from them. And they said, well, okay, if you let us service your loan, then we'll give you a rate of 3.5% to let us service your loan, but we're not going to give you the down payment assistance. But you still have the same 10-year term on your loan as
Doing
that if you got the down payment funds itself.
okay.
So that's how Advantage
I got
works.
questions on this one.
Yeah, this is
Question
work here.
in regards to the one, if you choose the 0% because you just want to take advantage of the interest rate, do you
Right.
still have to go through the same rigorous determination as if somebody who is getting down payment money as well?
Yes, yes, it still has to be underwritten by South Carolina State Housing, same way that you would the bond program. However, this program is less restricted. The
Okay.
underwrite on this program is a lot more easier. It only requires minimum requirements, and again, it doesn't require household income. Now,
Okay.
that was more attractive when rates were a little bit better. Their rates right now, the same thing that they're offering to do 0%, we can still get you
Yeah, you got
almost that.
matching
Yeah, we
too.
can still almost. So it's not that much of a benefit. So if you want to use that program now, then the better reason to use it is to get 4%. However, on those rates, when you get 4% or 5%, those are pretty accelerated rates. Those rates, for instance, today, 4% down payment assistance, that would be an interest rate of 4.75%. So it's nearly 5%. If you were to get a 5% down payment assistance, then the 30-year interest rate on that is 5%.
Hmm.
Yeah. So the rates are a bit higher. It's not as good as the bond program, but if you don't fit the guidelines, for instance, if you got too much household income, you got too much household income. You know, when we put all of our income together, it's more than the limit, so we can't get anything. So I can say, hey, let's try Advantage, because Advantage, though the rate is going to be a little bit higher, I still might can get $7,500 for down payment assistance. So I need that.
So let me ask
70,
you this: do with getting that taking that higher rate with state housing because the loan is
mhm.
service state housing, is the person able, especially like with the FHA, are they able to do like a restream where they can lower the interest rate after 6 months, like how you do if doing a regular FHA loan?
Sometimes it all depends. It has to be handled through South Carolina State Housing because they service it and they own that loan. And when we get people generally that are looking to do that, sometimes we're able to do subordination on them, but you can't get any cash out. It has to strictly be rate in term.
Okay, to take it down. Okay.
Right.
Now, you and I, we had talked about it before, and I kind of knew about it. I just haven't didn't know all the details. For those of you all who may be as well getting, let's say you're on Section 8 getting housing vouchers. There is a way if you're getting housing vouchers that you could be able to still also, guys, purchase a home and possibly be able to qualify for down payment assistance. Ron, do you mind touching on that in regards to for those who may be getting housing
Yes.
vouchers?
I gotta tell you, Angelina, I'm really excited about this product here, because this is, in my opinion, uh, goes to something that you and I like doing, in particularly a lot. Uh, I believe it's part of what we are just called to do, and that is help people. That's what
Yes.
excites me about this. This is what's called the let me just make sure I got the terminology right on it, because the terminology was changed here recently. So I want to make sure I got the terminology right. This is the Housing Choice Voucher Homeownership Program. So let's talk about what that means, and I will try not to give an extended, exhausted definition of it. But what it means is for persons that are right now on Section 8 and they are um, uh, want to prepare themselves for home ownership. First of all, if it's through Columbia Housing Authority, you should already know about this program because the Housing Authority has been pushing this program in particularly because now there's so little rental that's out there in the marketplace. And we got a crisis here in Columbia, South Carolina concerning affordable housing. So one of the things that the authority is doing is they're helping you to become educated on how to purchase a home. And they're doing it without taking your benefit away from you, your housing benefit. Right now, whatever benefit that you are getting is going toward the landlord's rent. What about if you can take that you were giving the landlord in rent and be educated on how to purchase a house, be able to qualify to buy a house, and instead of them paying the landlord's rent, what about the same thing? They're now paying your home and they are creating home ownership for you and they are helping you to become a homeowner. And so now the rent that was going to your landlord is now going toward the mortgage that you are purchased that on the home that you are
Yeah.
purchasing. Literally, I am doing, and I'm excited about it. My very first loan under this program, this new program for a client right now. And the way that it works is if you're on Section 8, you're getting a voucher right now, you have to first go through your housing counselor. Your housing counselor will take you through the steps, take you through the program. You have to complete some home buyer education. You have to go through all of their steps. You have to have your credit score at least at a 620 credit score, that middle score again at 620, which is, by the way, what we already talked about. That's the bond loan requirement, right? So we're still
Yes.
there. So you get to that 620 credit score and you got income, and then they're paying a portion of your rent. Let's say hypothetically that the housing authority right now pays $500 a month of your rent to your landlord. Well, we're
Mm.
able to take that $500 and use it as income toward the purchase of your home. And then when your loan is approved and you're closed, that portion that was going to your landlord can now go towards your mortgage per month. Isn't that amazing? Isn't
Guys,
that just, I mean,
did y'all
isn't
hear that?
that
Go towards your
absolutely amazing?
not his mortgage where it's
Not
been.
his mortgage. Yeah, let's
This is
yours,
going to be a mortgage for you,
yours.
your family, your legacy of what you could be able to build. And that's why we're doing these because it's all about building wealth, building legacy, and it starts with home ownership. It just does. It
Starts with
starts
homeownership.
with ownership. And oh, somebody, Venice Boda just say that's a blessing.
It's
Exactly.
incredible. It's
You know,
Venice. It's
and
incredible.
it go towards.
And
Can I have 500 to go
and,
towards
and, and you know what? I've told you the good part, but there's another best part to it too. Well, that may be the best part, but let me now give you the good part. There's a good part that go with it too. The good part that goes with it, they also give you $8,500 in down payment money. Did you
So
hear what
you
I'm saying?
1,000 and
Eight,
you get money towards
you
your
get
mortgage.
$8,500, which is 500 more than the 8,000. So they give you $8,500 toward down payment and closing costs to use on purchasing a home, and it's your home, and whatever benefits that you were getting, you will get those benefits for the next 15 years with an annual review.
So the same thing you was doing with Section 8, but now
Before.
it's going to your property.
There you go.
Yours.
It's incredible. And, we are one, Silverton Mortgage, we are one of only about six active lenders in the state of South Carolina that are that are certified to do this loan. So you and I are going to create a campaign, just a side effort besides what we do with all of our other client base. We're going to create we're going to forge an attack on this. My Columbia branch, our office, we're going to forge an attack on this, and we're going to have an all hands on deck. And all of us are going to work on this, and we're going to add it to our portfolio to see how we can help as many people as we can to transition from being on Section 8 on rental to being able to be in a homeowner situation. It's quite exciting.
Yes, and if they're doing this, if Columbia is excuse me, not Columbia, but if the housing authority is starting to do this because they're already recognizing, you heard what he said, they recognize that there's an issue with the shortage of rent. With interest rates going up, home prices are already up and staying up. What do you think is going to happen? That rent
Yeah,
is going to go higher. So why not go ahead and take advantage of things like this and go ahead and get your home? Guys, even if it's a starter home, even I know he talked about before that hey, you have the money to sit here, and if you decide to sell, that's where we come in at as agents to help you because we could be able to look at the market, take and factor in whatever is left on that bond that's still owed to make sure that even if you do find yourself needing to sell, that you have the opportunity to do so and be cleared of it. But you can't do that with moving from apartment to apartment. You can't. And guys, it is obtainable. Home ownership is obtainable. All you got to do is just get started. And this is just really a fraction of things that's available. He stated also before that each county may have something in addition that you can be able to utilize, that you may can be able to stack on top. So we're not doing this just because we like to talk and watch ourselves in the video prompter. We're doing this
no,
because we want to make sure that people are aware of what's out there and that they're if this has been I want to have my family in a home by the end of 2022, you can be able to do that, but you got to get started today. And there nobody's going to come up to you and knock on your door and just hand you a house. That's not what's going
yes,
to happen. It's going to require you to put some skin in the game, whether it's your funds, whether it's going to the classes, going, maybe I don't know when they have the classes, but it may be on a Saturday. It may now with COVID, it may be virtual, but it's going to require some time and effort from you yourself to be able to obtain this. And we are here, we are ready.
yes,
As if you are ready to do it, we are ready to assist. And we don't mind going through because everybody's situation is different too. What's going to be the best options for you? It may be that utilizing down payment assistance is a great option for you. It may not be. And I'm going to be honest, if you already have the funds for your down payment of your home, I'm just going to go ahead and tell you now, it's the best for you to go ahead and utilize those funds and not necessarily have these programs because once you utilize these programs, you're tied into them. And then really, the programs are for people who need them. you know,
believe it.
it's for
It-
people who need
that
them.
is very true.
Heroes, they only have a certain amount of money. So if you already have 30, 40,000 stacked in the bank, and there may be a police officer who they don't, and him and his family truly need these funds, or someone who served our country who truly need these funds, think about that too. That when you take those funds away, that's taken away also from someone who really, really, truly needs them because that's what it's for. Assistance. If you need assistance, not well, I don't want to spend it. If you've been saving the money
Yes,
for a house, you're investing in yourself, and that's what that down payment is for. But for those who truly need that assistance, and you've been trying to save, and you've been trying to, and you just, and you may have saved it, but that might be all that you have. That's still good that you can be able to obtain that assistance if possible. But I just don't want people to automatically think, oh, I want down payment. I want this because I don't want to have to pay. It's not just like that. And that's why we really want to get on to talk about this. And also for those who just have been trying to save and just don't think that they're able to get it. Hey, you do have options out there. Ron, right quick, because I know down
mhm,
payment was going to take a little bit of what we were talking
yeah.
about. But as far as, and you know what, we can actually talk about this at the next call because I really want to.
That's
Is
what
there
I
anything?
was thinking
Let's talk about the next
because
call.
this was so meaningful, I think, and I want to make one quick comment on something.
Yeah, go ahead.
We were at our managers meeting in Atlanta a few weeks ago, and the we just brought on board company wise a director of affordable housing, and she's based out of Atlanta, and she was just kind of conveying to us, you know, again, just giving the same sentiments of what you were giving about understanding that it's for those persons that are really in need of having it. And she was funny. She says, I just recently did a loan for the CFO of Delta Airlines here in Atlanta. And she said, you want to know what the first question he asked me was? Is there
Down
any down payment assistance? So, it's part of our lingo. You know what I mean? It's
we
part of our
we think it's
lingo.
free money. And it's like, oh, it's free
Yes,
money.
and
Yeah,
that's
but
what we have a tendency of thinking,
nothing is
but it's
free. The government never gives out anything that's free,
yeah,
guys. Just letting you
yeah,
know. You don't know anything else, they probably gonna shut me down. The government never
yeah,
gives out anything that's free. So,
yes.
it's just, you wanna if you need it, hey, I'm all down for it. And I would share with what we need to do is going to be the best program for you. But for those, if you honestly don't need, you said the CEO of Delta.
Of Delta Airlines, she said the very first question that he asked her, if you want to help me with this loan, she said, I want to know what type of down payment assistance
What's that?
program that they have available here in Atlanta. Because he's, of course, moving to the Atlanta market. But yes, that was the first question she said he asked. And I can relate to that because I'm almost asked that question all the
I,
time. And I know
right?
you are as well.
Yeah,
Yeah,
we
because
are. I know every agent. That's one of the main questions that everyone asks,
right.
and just know also, just like he stated, it's not ultimately decided by the lender. It is the state housing. Frankie's laughing.
Yeah, it's facts, Frankie.
It is determined by state housing. So if for some reason you're not able and to get it, it is their determination. They have the final say. And so even if you're in the process and let's say you've gone to Ron, we have you on track for state housing. I still tell clients this: still save your money because
Yes,
it's not finalized and it's not approved until the dead end. And when I mean the dead end, I mean like
daddy.
days before closing. So in the meanwhile, if you have the money and you have access to it, or let's just say, your parents like, hey, I want to give you a gift for your first home. Don't go out and start buying furniture, buying everything from the house, spending this, spending that. Don't buy anything with that money. Save it because nothing is finalized until it comes back from state housing and they say approved. Because they can easily run out of funds. With Palmetto Heroes, like I say, it's only a certain lot of funds that they give. Depending on the time of the year, it affects it too. And another thing that affects state housing, correct me if I'm wrong, Ron, but if we have it to where it's I don't know if you remember those years ago when the House and the Senate was at a deadlock and it stopped all government programs.
Yes, absolutely. Because I think it was over the budget because all of those funds are allotted through the budget, and it can have an effect. And we know it happens with USDA every year. It's always a delay in funding with USDA loans. But yes, you're 100% correct. And but I think the biggest thing that we give as a takeaway advertisements that are on handwritten signs on the side of the road. Call me for no down payment assistance. We get you in for free. We get you in with no money, and all of these things. Um, be very careful. I would suggest because while while we would love to believe all of these things, and there are instances where may have been a person with a unique situation that had a situation where they didn't have to bring any cash to close for whatever the reason might be. That's not the standard. It's not the ordinary. There are other things that are behind the scene that goes with it. And so the best way to do it is understand this about my position and Angelina position and any one of us that are in a position like this. For us, nothing happens. We want to get you the very best that we can get you.
Yeah.
None of us are here to hold back anything that you qualify for, but we are here to get you the best rate. We're here to get you the best home. We're here to get you the best everything that you desire in your experience, and we will see to it that that happens. But there are some things that we know that just not is in the cards for you, is not in the right suit for you, or may not be the thing that it was sold to you as. And we're going to be honest with you. We're going to be truthful about it, and we want to get you the best. And that's the thing about it. If you qualify for it, no worries. We're going to get you. We're going to get it for you. We want to get it the right way and put you in the right position. I told one of your clients today, Angelena, uh, young lady that I just enjoyed talking with, that we don't go away after your loan is closed. You're not one time for us. We're gonna be here with you the life of your loan. And so that's the difference. That's the difference. We're not trying to, that's what you need to understand. Many people that have these types of things out there, they're looking for one opportunity to get what they can get out of you, and then they're going down the road. And when you're left with the problem, they're not there to help you. We're here long term, and that's what I believe is the difference between what we do and what others do sometimes.
Yeah, and then transparency. That's another thing as well, because what I don't want you to do is get into a program and then you call me up and say, "Oh, I'm ready to sell," and then, okay, well, you're kind of still upside down because of you utilize this. There are a lot of people who they've experienced that because they didn't, and not to say that it wasn't conveyed to them, but they didn't understand. And that's why it's important when we're talking about, for those who are ready to sell, if you, whatever type of programs you have, it's important for you to let us know as agents, because we have to factor those things in there when it comes to, okay, so you had a house, you had state housing, okay, is it forgiven yet? That's one of the questions we're going to ask, and we'll have you call state housing to find that out. And you want to find that out, because what you don't want is you get to the closing table and you thought you were getting 10,000 and now you're only getting two, and now you was planning on using that towards your next home. So make sure that you keep up with these things when you utilize these programs. Keep that in mind, those years. Like I said, if it's something that you have to utilize, then we are going to be here to guide you through it. But if you are able to be able to take care of your home and be able to get in a program, excuse me, and be able to get something that you're able to handle yourself, my suggestion from experience and my professional opinion is do that and let this be a last option if needed. Okay.
Absolutely. Absolutely. So going forward, we're here to answer any questions that anybody
Yes.
may have.
Does anybody
Um,
have any questions besides the CEO? The expert down payment assistance.
yes, yeah. That's what she said he wanted to know. She said he wanted to know.
You got
Please
the
tell me.
millionaire, but that's how
Right?
the rich get rich. They're like, hey, whatever I can take advantage of. Hey, I guess he's like, hey, I'm save this ten
Yes,
thousand
yes.
dollars.
That's the mentality of a lot of people today. So, well, we thank everybody because this has been exciting, and I would just encourage people to share with others for their questions that they may have on this topic.
Yes, and guys, we do this every second Tuesday, and so tell if you want to put it in your calendars or tell people like, hey, go to Ron Williams' page, go to Angelina McFadden's page, and be there for Second Tuesday, because we have different topics that we talk about, things for you to be prepared for. If you yourself are wanting to get started on the process, I know I'm gonna do my little graphics at the end.
Yeah,
Please reach out to me for a consultation. You can go to is down here at the bottom here, at www.dealswithangie.net to build a consultation. From there, we will go ahead. I actually have the link to get you started with Ron. If you have direct questions that you want in regards to lender related questions, you can reach out to Ron by going to this
Yes.
number that you see, which is 803-888-2999. That's the easiest number there. 888-2999.
I had an agent that saw our advertisement today that lives in Sumter. She said, "This cannot be your number." I said, "But didn't you call me on the number?" She said, "Oh God." She said, "I guess I did."
It's so easy. But
Yes.
guys,
She said, "How did you get this number?" I said, "I saw George Sink years ago, and I said I want a 999 number too." So they made it happen for me.
they did a good job. I need them to do that for me too.
Yes,
But
yes, yes. It's so very
so
easy.
give us a call. We'll get this squared away. For those of you all who joined us and have been asking questions, we greatly appreciate it. We thank you so much for your time tonight. And we had to postpone our home buying event, our house party, but we are getting those dates so that way we can be able to have that. We will see that.
Yes,
For those at the house party, we're going to be having to where Ron's going to be approving people on the spot. He's also
yes.
got things he's going to be giving as far as up to closing costs for clients that are coming there. So stay tuned for that too. Ron, I thank you so much for always having your time, sharing your time and expertise and knowledge with us. I greatly
Well, no,
appreciate
I want to thank you for just partnering with this piece that we're doing weekly, monthly, and considering me as one of your partners because I greatly appreciate it too. And I'm excited as we continue again to help people. That's what it's
it.
all about for us. And we'll be here and look forward to next month.
All right. Well, guys,
All
thank
right.
you so much. Have a blessed one, Ron. You have a blessed one.
You do the
Thank you.
same. We'll talk later. I'm going to drink some Starbucks coffee because I smell it back here. I smell it, smell it, smell it. Yes, I came. I told you they're training. I'm excited to go get me some.
I know. I see that. You jumping out the seat.
Yes, 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 exactly, exactly. Good day.
You
Thank
thank
you.
you,
All right.
guys.